Welcome, ladies and gentlemen, for joining us today on September 23rd. This is Bert Dohmen's Chart Guru. We're going to look at two charts today, one of the largest bank in Germany and the other one of a very large bank in the United States, Citigroup. Let's first discuss the current situation of the stock market. The debate in the financial media is still, is this just a market correction, and is this a buying opportunity for stocks, and will the stock market now go to a new bull market high? The minority, which includes us, think that a very important top has been made. So let's just take a look at two charts and how they look over the long term. As you know, the financial sector is the most important sector in the stock market. If the financial sector does not look healthy, then the rest of the stock market isn't healthy either. Even if there are some sectors that have made new highs, but those are then speculative highs driven by excessive liquidity created by the central banks. Here we have the Deutsche Bank, which is the largest bank in Germany. And you can see here in 2004, 2005, 2007, it made a new high here at $160 a share. Very good. Then came the crisis. And in 2008, even in 2008 here, as the bear market for the financial sector was already developing, the analysts on Wall Street failed to recognize it. They were still looking for new highs ahead in the stock market, while we were looking for a disaster similar to 1929, as written in my book Prelude to Meltdown in 2007. And here we can see the low in 2009, and that was at about $21.57. We had this recovery attempt, and since 2009, since the high, it's been going down, 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 nothing but down. This is very important for one of the most important companies in Europe. And you can see here the old low of the 2009 crisis is not far away. And eventually our prediction is that Deutsche Bank will go to new lows. Currently, it's down 87.7% from the 2007 peak. So anyone who practiced here the buy and hold forever approach, they're sitting underwater, and this will be sitting for a long, long time. They're down 87% now on their long-term investment. Now, some people say, well, we don't know anything about the German banks or European banks, so let's look at the U.S. So let's do that. Let's look at Citigroup, which is one of the largest banks in the United States, and look at this decline here from the 2007 high, where it was $560, I believe it was, per share. And then it got all the way down here. And so that was about 96% decline. During the last 7 years, that's all it has been able to do, this little anemic rise. This is what we call a dead cat bounce. And currently, Citigroup is still down 91% from its 2007 high. Do you think this is really a new bull market right here? How can all these analysts that go on TV think that this is a buying opportunity instead of a selling opportunity? Our work says that we're going to go back down to this 2009 crisis low, and it's going to go lower, and it spells out some very interesting situations for investors. We aim to make a lot of money for our subscribers over the next year, but it won't be on the bullish side. Thank you for joining us today. Be sure to look at our website, DohmenCapital.com, and see what kind of advisory services we offer by subscription. We don't manage money. We don't sell any stocks. We have no conflicts of interest. Thank you very much for joining us today.